Let's talk taxes. For middle-class Americans, tax season often means filing their Form W-2, taking the standard deduction and hoping for a decent refund. But for the wealthy, it's a whole different game, one where strategies like charitable LLCs and conservation easements let them legally lower their effective tax rates. Here's how charitable LLCs work. Instead of donating directly to a charity, the rich create LLCs to manage their giving. This setup gives them total control over where their money goes, privacy in their philanthropy, and huge tax deductions. Plus, they can borrow against their wealth within the LLC and still claim those deductions, keeping their cash flow intact. The kicker: maintaining an LLC isn't cheap. Between legal fees, state filings, and advisory costs, the expense alone makes this strategy out of reach for the average taxpayer. Now, let's look at conservation easements. This loophole allows wealthy investors to buy into land deals, agree to restrict development, and claim deductions worth up to 3 times their investment. For middle-class families, the upfront cost to participate is simply unaffordable, making this another tax-saving strategy reserved for the rich. Both approaches rely on having money to save money, leaving middle-class taxpayers stuck with fewer options. While the wealthy shrink their tax bills, everyone else shoulders the burden. Until reforms close these loopholes, middle America will keep losing in this unfair tax game.